This is the market levels report for the S&P Emini, the ES contract. We talked about this before. We had the big rally up through the 1400s level. Had a lot of buying come in as the market made this run up to the 1410s, 12s area. Since that time, we did have the big blow-off rally where the last held short inventory in the market finally unwound. Right as that happened, 1421.75s on up, we had a little bit of newly initiated buying. For range extension, that got faded and down the market sold off. We are currently holding some of that short inventory still off the highs. Since then, the market's had difficulty trading up above this 1415s to 1418s area, and the market has traded back down as low as the 1395s. Now with the pullback to the 1395s, we've still had this very large quantity of held long position supply retained. That inventory is not liquidating. Since then, into today and into the Bernanke speech in Jackson Hole, we did get some rallies take place as the euro dollar did recently trade up through the 2600 level, and that did get markets rallying. We've sold off coming into the Bernanke speech, and then afterwards we've rallied again. You can see recent buyers of this pullback to the 1395s have been long liquidating. The market will not trade through the 1395s and have any range extension lower until we get this significant held long inventory to finally liquidate. So for all the pullbacks to this 1395 area, we've had a very strong positive divergence between price and held long position supply. And as you can see on multiple retests of this 1395s area, this long supply is being held at this point. We'll be watching this long inventory supply to see if it lets go. That's what will be a requirement for the market to really start trading down through the 1395 level with any authority. To get back to the 1418s level or above, that would then challenge this upper held area of short inventory, and we'll see if we do get any rallies next week through this area, if the inventory holds or folds. So market so far is trapped between these zones of held inventory. There's also multiple additional levels just below, so it's not all that surprising on some of these pullbacks. We've been bouncing off this area so far. Catalysts to get this market to trade through probably need euro dollar to start selling off again. Get equities with US dollar rallying to get into a selling mode. If equities both in US or Europe start selling off again as a result of currency movements, that could be their catalyst where we get this long positions that are being held, significant amount of inventory being held to finally let go. That's where we're at with the S&P E-mini for the last day of August.